Good morning, everyone. Thank you for joining us for this webinar on the Union Budget 2024. My name is Swati, and I'm delighted to welcome all of you on behalf of Sailotech, which is an application service provider offering solution for e-invoicing and GST filing tailored for Indian localization. This session is made possible in collaboration with Darda Advisors. They are our knowledge partner and they deliver specifically client-specific tax solution across India and providing expert strategies and solving tax issues. So, as you all know, like Finance Minister Nirmala Sitharaman represented her seventh consecutive budget in Parliament yesterday. So, this was the first full-fledged budget of Modi 3.0, and it has set high expectations across various sectors. So, today we aim to help you understand the key aspects of the budget and how it might impact you. Now, allow me to introduce our esteemed speakers for today's session. Firstly, we have Mr. Vineet Suman Darda, an expert in indirect taxes. He is the co-founder and managing partner of Darda Advisor LLP. With an impressive background as a qualified chartered accountant and company secretary, he brings over 20 years of rich experience in the field of tax and regulatory services. Now, let's turn our attention to Mr. Pankaj Sancheti. He is the director tax expert at Kevalin Consultants. Thanks both of you for joining now. And we have an association partner also, CIMEI, like Confederation of Indian MSME and ESDM IT. He is the director, Jairaj Srinivas. Welcome, sir. He is the director general of CIMEI. And he will be here to give a brief on budget first, and then Vinit sir will take the session forward with indirect taxes. So, yeah, Jera sir, please continue. You are on mute, sir. We can't hear you.
Jairaj, you need to unmute.
Yeah, okay, okay.
Yeah.
Am I audible?
Yes, sir.
Yeah, good morning, all of you. Swati, Vinitji, Pankaj, and everybody who is participating in this particular discussion. It's an honor to be the part of this forum. Thank you, Mr. Suman, for inviting me for this particular discussion. Of course, yesterday, Finance Minister Nirmala Sitharaman has presented the budget. If I look at the overview of the entire budget, it has nothing much to be, there is nothing much what the government has offered to the any soap they have not offered. But of course, the offerings to the Andhra Pradesh government and Bihar government is one part. Looking at the industry perspective, what I feel is that uh, the uh, the offer what the government made for the skill development and encouraging the internship, the forgotten area where people have not used the Apprenticeship Act 1962. Now at least the government is serious to provide skill, because yesterday morning only I was discussing with a couple of EMS companies across the country, and they felt that there is a very big skill gap. This particular policy will help industry to reduce the skill gap, and a lot of employment can be generated. Yes. Another issue is that the credit guarantee scheme. Okay, a lot of work has been done by few of our members for this credit guarantee scheme, because MSME today, most of the people they know, at least the people from the your community, that the MSME community is facing the problem, even the working capital also.
Mr. Jairaj, you're on mute. Mr. Jairaj, you're on mute.
Yeah. See the policies which they introduced for the skill development is welcome, and it will help a lot of employment generation. Then one more thing what government has issued is basically the credit guarantee scheme for the MSME. It will take this particular policy will help the MSME to do the business at least in a cool. And the issues which were not welcomed by industry is uh, the the duty which is they have reduced, particularly on the mobile chargers, because in India, particularly in northern part, Noida, Ghaziabad, Hyderabad, and all, most of the companies are manufacturing the mobile chargers, and most of the brands they are procuring that. If this BCD is reduced, people will start importing from China, and
Yes,
this
Swati.
particular industry will lose. So government should have thought of that. Maybe our voice can be raised in the parliament in the forthcoming budget discussion. And of course, the BCD on gold and all, it will affect the common area. As far as the income tax rebates are concerned, it has not paid anything much attention to the middle class, which middle class people were expecting that the government will announce some kind of relief for the middle class. Because yesterday, when I was looking at, only 3% of the people in this country, they are paying the tax. So the whole country has to run with the 3% people of the income tax. Government should work on broadening the more taxable people, not people who are filing the return, because government is calculating that how many people are filing the return. But if you look at the total area, it is only 3% of the people who are paying the income tax. In fact, I am one of them. Those. So this is my comment on the entire budget. Rest I will leave it to the experts in the team who will educate me on this particular subject. Thank you so much. Viniji, you can continue now.
Yes, Swati.
Yeah, Vineet, sir, you can, yeah, start. I'm just sharing my screen.
Sure. Thank you, Mr. Jairaj, sir, for sharing the insights on the budget, what industry is expecting and what they missed out from a CIMEI perspective, where mostly all the players are from electronics industry, ESDM and IT, especially from MSME. Now we look forward. First, we will have a brief glimpse on the economic survey, key budget highlights, and then I will request Mr. Pankaj, to share the details about the direct tax proposal. Then I will take the indirect tax proposal for consideration, and then all the questions and answers for the session we can take in last. You can put your questions in the messages, or maybe we will open the platform where you can put your view by raising the hand, where Ms. Swati will share the question, and accordingly me or Pankaj or Jairaj will answer the same. Swati, can you move on the next economic survey part? If you go by economic survey claims, specifically they are telling that in brief, sunny with the chances of dark cloud. The way industry is expecting, the way economic survey is given the future forecast of 6.5 to 7% GDP growth rate for current fiscal year. And looking to other aspect, obviously the budget also has worked on such aspect looking to the current coalition government in regime. Swati, can you move on to the next slide? Yeah, next. Yeah, next. This one. Thank you. And you can see even they know AI has to reboot, but should not delete jobs, because even the budget has worked on the creation of job incentives in multiple ways. Obviously, it's also impacting the DG payment ecosystem. They have also telling to concentrate on agriculture credit. Do not say no to China, specifically from an investment perspective. Obviously, we want to make India as an export hub, not only to manufacture, only for India consumption, also for a global market. The way China is looking at, we are looking for China plus one. And as China has adequate funds, that's why economic service suggesting why not having funds being invested in India to help India making as a manufacturing hub. Yes, there is an inflationary pressure which government is controlling from a administrative and monetary perspective. All we know from the multiple wars and the climate change studies happening, and the way we don't know how the way US elections give the mandate. again, it will have the impact of the global climate change strategy. Yes, government is also concentrating on the decrease in fiscal deficits. Even economic survey has given claims because the government, private, including state government should work together if you are looking for a vision 2047 for a Viksit Bharat. And yes, also suggestion for all individuals like us, please take care of your physical and mental health. You are the asset for the country where we can see a Viksit Bharat together. Swati, next slide, please. And yesterday we have seen the way the Ms. Nirmala Sitharaman on the 9 priorities she worked on. But if we give the single theme for this budget, is like a podium finish for jobs and taxes. The complete budget is on the creation of jobs, which was also issued during the elections, and also taxes. Somewhere it's a plus for people, somewhere it's minus, obviously, that we will discuss in detail. But yes, the way they created the multiple industrial park zone, concentrating on the Purvodaya, which is eastern area, including AP, Bihar, Odisha, West Bengal, and other states. Multiple incentive schemes. First scheme is like for a top 500 companies, give the trainings. We will pay you back the stipend of 5,000 per month for 1 year. In incentive to individuals up to 15,000 rupees for a employees provident fund contribution. And third, where our employee, both they are going to contribute a part of the EP. So they want to have everything organized sector where the PF, employee provident fund, is concentrating, yes, who are in the job or not into jobs. But what about the jobs created by the micro and small industry? Because yes, mostly such people, due to the mandate of minimum amount, are not part of the EPF regime. Next slide, Swati. Yes, they also suggestion to have reduced the stamp duty for women by states, creating the synergy for energy development where they given the multiple benefits to the solar sector by reducing the capital goods rate for the capex for manufacturing of solar panel. And if you go from a brief on the overview of how the taxes has moved, they have taken care of startup by removing the angel taxes. By individual, by in the new regime, they're giving the most standard deduction, change in the slab rate, but again, they increase the long-term and short-term capital gain tax rate without index benefit. Then we see from corporate for foreign companies, they reduce from 40 to 35%, again, a good move. Also, they are looking for revision of complete income tax regime, giving the Vivad se Vivash benefit. If we come about the indirect tax, already GST Council has given the multiple amnesty benefits in the last meeting. Some provisions have been proposed in this bill. In addition, a certain aspect which has a more added, which will reduce the compliance, give the more relief to taxpayers in all aspects. They have reduced the import duty on gold, silver, platinum, and obviously gold reduction will not only help individual, also the industry like semiconductors who have the use of that. They reduce the custom duty on mobile phone. I don't know why. When they're giving the PLI of more than 25,000 crores plus, and again they're bringing the PLI 2.0. Why we need to reduce the import duty on mobile phones if you're looking for a make in India? On PCB assembly, they have reduced and also increased on the other aspect custom duty. Also in SEZ, from retrospectively, they have given the relief on the compensation cess, which means then they should look also into giving refunds to all SEZs. So in all brief, concentration on creating jobs by the private players, and second, on taxes, multiple aspects to be looked into it. Now I request my colleague, Mr. Pankaj Sancheti, who is a director expert having multiple years of experience in Big Four and now in the Kevalin Consultants, to share the views on various proposals which are giving benefits or sometimes concerns to them. And then after we will have a discussion on indirect tax, and then we can take all the questions and answers. Over to you, Mr. Pankaj.
Thank you, Vineet. Firstly, is my voice audible?
It's
Is my
audible,
voice
Manoj.
audible?
It's
It's
Yes,
audible.
it's
Okay,
yes.
audible,
thank you.
Pankaj.
Yeah, thank you. So thank you, Vineet. Thank you, Jairaj sir. Thank you, Swati, for having me here. Just to give a take on the budget proposals uh, and hearing Mr. Jairaj and Mr. Vineet. Uh, the theme is to fix it Bharat, have a developed India, and I think most of years here uh, can think of seeing a developed India going forward, provided. But is this the budget which can take India to a developed India? I think yes, if it is implemented in the right spirits. There is nothing negative what I see in the budget as such. A lot of positives, uh, but a lot of misses also. Particularly, there was not much on the sustainability front, because this is some of the things which India is facing challenges. So yes, if a lot of the things which the finance minister has said are implemented in the right way, I think there will be a lot of going for the economy. Coming to the direct tax proposals, uh, again, I have heard a lot of people saying there's nothing significant, nothing given in the direct taxes. Uh, I agree, there is nothing significant given. But even after nothing much is said, there are more than 100 amendments in the direct taxes. Uh, so it is a lot of changes are there, but I think most of the changes suggested are rationalizations, timelines changes, not really impacting uh, most of the taxpayers. There are some blockbuster announcements in the budget. I will first, go through them, and then we will go to specific changes. There is a proposal to review the income tax and with a timeline. So, as you would all know that there this proposal to review the Income Tax Act, which is more than now 1,000 pages of act, has been going on for last 10, 12 years. In 2010, there was a direct tax code also released by the earlier government, but it didn't move forward. So here there is a timeline. Hopefully, the next Finance Act will see the direct tax code, uh, and the Income Tax Act of India requires a review. The two terms of this government ignored it. Maybe this in the Modi 3.0, this could be the focus, and they may get in. So that's a good thing. There is a proposal to introduce direct tax Vivad Se Vishwas scheme 2.0. There was a scheme in 2020. Now they've, proposing to get it again, broadly similar, because over the last 4 years, there has been huge pile up on the litigation, particularly during the COVID time, pandemic time. The all the litigations, hearings were put on hold, and nothing moved for a couple of years. And then a lot of assessments, audits were happening faceless, without enough representation. So a lot of this litigation pile up has been there. So I think this is again a good thing. I think they should make this direct tax Vivad Se Vishwas a permanent scheme. Uh, so the scheme will be notified. It is broadly similar to what was there in 2020, where if you are under litigation, under a case, you are litigating something, you have an option of paying the taxes, and you may get waiver of the penalty and interest. And if the cases is on penalty and interest, then maybe you pay part of the penalty and interest and not the full amount. Uh, and the third major change, I would say, is increase in the monetary limit of filing of appeals. So as the government is the biggest litigate in India, I mean, more than half of the appeals which are lying at different levels in India are being filed by the department. So the proposal to limit the amount or the tax effect for which appeal can be filed by the by the departments is a very good move, because the earlier limit for a tribunal appeal was 20 lakhs. Now it is being increased to 60 lakhs. High Court, it was 1 crore. Now it is increased to 2 crores. Supreme Court, it was 2 crores. Now it is increased to 5 crores. I think this change itself can reduce the government litigation by half. So it's a good move. Yeah, we can move ahead. Increase in powers of Commissioner of Income Tax Appeals. This I will take up in detail later, but in summary, now the CIT appeal has power to restore a case back to the assessing officer, and we will look at it how this is a good move. Abolition of angel tax. This is again a very good thing. This angel tax has been, I mean, I don't really know whether the government really collected any tax out of it, but this has been a big headache for all the startups and PE funds, VC funds. I mean, any due diligence, this was a aspect was looked in detail. So I think it's a very, very good thing. It is something similar to what the government did uh, when they removed the retrospective amendment on the what was called the Vodafone tax. So I think that this is a very good thing. Uh, and again, one other last blockbuster announcement is abolition of the 2% equalization levy. So this 2% equalization levy was introduced in 2020. I mean, there's EL 1.0, which is on online advertisements, and then there was this EL 2.0, which was on foreign companies selling goods and services to India. Again, if it is to an e-commerce platform. So this was a big cumbersome uh, provision which required you to analyze whether the goods or services are being rendered online or not, and this 2% equalization levy required a lot of compliance on the part of foreign companies to do business in India. So abolition of this provision is a good plus. Now coming back to the specifics, and we will start with the tax rates for individuals because this is what everyone was looking, particularly the middle class was looking forward to. And I think like every year, there is some tokenism done on this front. And this year also there is some token savings of up to 17,500 being given, provided uh, you go with the new scheme. If you are under the old scheme, then yeah, there is no benefit at all. But if you are under the new scheme, then there is a saving possible of 17,500. This primarily is coming from two aspects. One is there has been a change in the slab rates. The what you see on the slide is the 3 to 7 lakh, the say 5% slab rate of 3 to 7 lakhs. It was earlier 3 to 6 lakhs, and then it was 6 to 9, 9 to 12. So these slab rates have been changed, and because of the slab rates change, there is a reduction in tax of approximately 10,000 rupees. And then there is a standard deduction for salaried employees, which has been increased from 50,000 to 75,000, which gives you the balance 7,500 tax savings, so overall a 17,500 tax savings. And there is again for family pension and pensioners also, the standard deduction has been increased from 15,000 to 25,000. Yes, let's move ahead. Capital gains taxation. This is something which has been requested by the industry, by the taxpayers, that it should be simple. The government always acknowledged that yeah, India's capital gains taxation is complex, but hadn't done much in the past. So this year they have made a start. I wouldn't say they have completely rationalized it, completely simplified it, but they have made a good start. Uh, so the key changes are one is on the holding periods. Now there are only two holding periods: 12 months for 12 months and for listed securities and business trusts, and 24 months for all other assets. Earlier you had 12 months, 24 months, 36 months. So now there are only two holding periods to determine whether an asset is a long-term asset or a short-term capital asset. One change again here which is impacting is earlier for listed bonds and debentures, the period for determining was 36 months. Now because of this change, now it is going to be just 12 months because all listed securities have been clubbed together for determining the holding period. Uh, Short-term capital gains tax for STT paid, it was low at 15%. Now it has been increased at 20%, which is a marginal increase in the tax rate. But yeah, not significant increase, it's a marginal increase. So other assets capital gains tax rates continue to be the same, which it falls under the normal tax rates depending on what slab you fall, and for most of us it could be in the 30% slab rate. On the long-term capital gains tax, indexation has been removed. So earlier you had indexation benefit for most of your assets, where you could do the indexation, and accordingly pay 20% tax after the index cost. Now that indexation benefit has been removed. So, along with that, the rate has been reduced from 20%. It has become 12.5%. So it has been reduced from 20% to 12.5%. Similarly, for listed securities assets, where it was 10%, it has been increased from 10 to 12.5%. So there is a one rate of 12.5% on long-term capital gain. I think it's a very good move because it makes life simpler uh, for most of the because otherwise you had to do indexation, and for listed securities, in fact, you had the you could compare, and you had two schemes. You had the 10% rate scheme, and then you had another scheme where you could do indexation and claim at 20%. And so you had to compare which is beneficial and accordingly offer. So here I think it's a good thing. It has been reduced to 12.5%. Though some would not be happy with this, but I think most should be happy because the rate has been reduced. Exemption limit for long-term capital gains from securities, there was a 1 lakh exemption limit. Now that has been, as a token measure, increased to 1.25 lakhs. For specified mutual funds, particularly mutual funds which invest in debt funds, there was a tax rate of uh, they were taxable as short-term capital gains. Now they will be there was a confusion on what was those specified mutual funds. So there is a clarification on the definition now, and it will be taxable as short-term capital gains. So basically, any mutual fund investing more than 50%, 65% in debt funds will be considered as a specified mutual fund taxable under 50AA section. Yes, Swati, we can go ahead. Similarly, non-resident taxation for most of the foreign assets invested in India, the tax rate was 10%. Now, to align and make the tax rate 1, it has been increased to 12.5%. Accordingly, the withholding tax provisions have also been changed. I'm not going into detail, but in sum and substance, the 10% wherever it was there has become 12.5%. Marginal increase in the STT security transaction rates, particularly options and futures, maybe to discourage, because there is a huge spike in the trading of options and futures. So to discourage, maybe there is a marginal increase in the tax rates. So that was on capital gains taxation. This was expected to make it simpler. Yeah, it's in the step in the right direction. Rationalization of TDS rates. Again, this was a huge demand because there were so many rates of TDS ranging from 0.1% to up to 30%. So here there have been some changes, and in particular, there has been some reduction in the TDS rates. So for businessmen, it's a good positive because there will be less tax being stuck up as working capital. So basically, the 5% rates for number of sectors have been reduced to 2% now. And for e-commerce operators from 1% to 0.1%, that is also a significant reduction. So there have been some new TDS also introduced. The next slide. So yeah, there has been one deletion on repurchase of units by mutual fund and UTI. There was a 20% TDS rate that has been removed now. And there have been some new TDS provisions which have come in. One is 194T.
Hello, sir.
On, payment of salaries.
Got it, sir. Good morning, sir.
To partners by a partnership firm. There is a 10% TDS rate now proposed. This will have certain challenges because generally in a partnership firm, the profits, the payments to partners is generally decided when the books are audited and prepared maybe by the due date of the.
Yeah, boliye. Go ahead.
So now with the 10% rate, I hear someone's
30,000
voice.
rupees.
I have to mute them.
Swati, can you please mute them?
You can do it from the website only.
Yeah, fine. Swati, you can share the screen. So this has been a new TDS rate which has come for partnership firms, and then there is some floating rate savings bonds. Again, on that 10% TDS has been introduced. And then there is a TCS on notified specific luxury goods. Currently, there is a TCS of 1% or when you buy luxury cars, that is cars about 10 lakh rupees. Now on notified specific luxury goods. So we will have to see what will get notified as specific luxury goods. So similar to the tax which you gets collected at the time of buying uh, cars about 10 lakh rupees, there will be some tax that's going to get collected on specific luxury goods. So we'll have to wait and see what those specific luxury goods would be. Yeah, moving ahead, some more. I mean, as I said, there's number of provisions where TDS provisions have been rationalized. Some from the perspective of giving easing the compliance for the taxpayers, and some from the perspective of the department. So let's look at it. What is there? TDS on salary. So as you know, when the TDS on salary is computed, the employer is required to compute also the tax and the tax on all other income of the employees. The employees are required to disclose this to the employer, and the employer is required to deduct tax on all other income of the employee. So generally, here when the tax was deducted, the employee could have already TDS and TCS on such other income, and which the employer was not supposed to consider, but and then the employee would have to file a return and claim refund. Now there has been an amendment, and then a requirement is that the employer can consider the TCS and TDS which the employee has already suffered in computing the TDS which he has to do. Interest rate on TCS, where this is particularly where TCS is collected and not paid, there was a penal interest of 1%. Now that has been increased to 1.5%, so that it is consistent with what is there in the TDS provisions. TCS credit, parents can claim. Sometimes there is a TCS in the name of the children, so that credit can be claimed while computing the. This specifically was there for TDS but not for TCS, so that has been included. TDS on sale of immovable property. Now, this was a loophole. Suppose 2-3 persons were jointly purchasing a property, or they were someone was purchasing a property from 2-3 buyers or sellers, where the total consideration was more than 50 lakhs, but individually it was less than 50 lakhs. Then the TDS was not being deducted. So now that has been clarified that even in, so it is basically transaction specific. So if in a transaction, the total consideration, irrespective of number of buyers or number of sellers, is more than 50 lakhs, then TDS would have to be deducted. 194J. So this was on professional and technical services. So there are two rates in 194J, 10% and 2%. So there was a issue that some taxpayers were deducting TDS under 194C, considering it as work, where the TDS rate could be 2% or 1%, and accordingly not deducting under 194J. So now it has been clarified that where 194J applies, you cannot deduct under 194C. Exemption from prosecution. This again is a positive thing. I mean, prosecution for non-compliance on TDS is really a cumbersome. A lot of taxpayers are receiving notice on this thing. It's really, I would say, it is a draconian law, because the TDS compliances could be delayed for varied reasons, and prosecuting taxpayers for delay, charging interest, charging penalties and other things, but prosecuting them for delay. So this law as such has been not been tested at the courts much, or it has not been taken to the courts much, but of late, a lot of notices have been received. So there is an exemption from prosecution for the delays which have been corrected before filing the quarterly returns. So that's a good thing. Some other TDS rationalizations, 194Q and 206CH. So these were TDS provisions on purchase of goods. So this were introduced a couple of years back for certain taxpayers having, I mean, turnover about 10 crore rupees. They were required to do it. The rate also was very low, 0.1%. But for certain taxpayers which had losses or very low profits, this was a cost, and this was working capital being stuck, and it was impacting business. So now the lower score deduction certificate, which a taxpayer can go and claim if he doesn't have enough income under 197. Those provision has been expanded to consider 194Q and 206CH also. So that's a good thing. But again, there is a process. They have to go to the tax office and get a lower taxation certification. 206C, again, for TCS, certain taxpayers, TCS was being directed, and the taxpayer itself could be an exempt entity like an NGO or a government entity. So to reduce the compliance for them, again, certain persons can be notified for exemption from TCS. The government will have to notify this thing. Uh, time limit for correction of financial statements. Again, there was no specific time limit mentioned, and certain TDS statements, TCS statements, they corrected maybe 5 years, 6 years later. Though now there is a time limit of 6 years. I think 6 years also is a very long time limit, because I mean, sir, somewhere the time limit has to come to an end. Otherwise, it's open forever now. So they have reduced it to, I mean, they have prescribed 6 years time limits, which is a good thing. But yeah, it gives enough time if there has been some errors in the TDS and TCS to correct for the taxpayers. There is a penal consequences if you failure to furnish TDS and TCS return, there is a penalty, but the penalty was there only if there's a delay of more than a year. Now that has been reduced from 1 year to 1 month. So a lot of focus on TDS, and as everyone knows, TDS, TCS, these things give more than 1/3 of the government's tax collection. So now the time limit for penal consequences has been reduced. So what the government expects is that everyone pays the TDS on time. Coming to tax reliefs, are there any tax reliefs? Yes, here and there, there are few, not impacting most of the taxpayers, but we will go through it. The one which is impacting taxpayers is employers' contribution to pension schemes, where it was 10% and 14% for government employers. Now it has been increased to 14% for all private sector employees also. So private sector employers can contribute for up to 14% of the salary under pension scheme and claim a deduction for it under 3615, and also the employee can claim a deduction for this under 80CCD section. So pension scheme has not been that popular, but now with these changes, I think it will slowly pick up, and employers will employees may go for this opt for pension scheme. Then employers may also offer this pension schemes savings to its employees. IFSC. IFSC, I think no budget in the last few years have gone without any changes in the IFSC, International Financial Securities Center. This is a gift city. India has only one IFSC, which is the gift city in Gandhinagar in Gujarat. And there are some taxpayers which are included. Basically, this was something like India wanted to create something like a Dubai, where there are a lot of financial services centers where funds are located. They invest in overseas markets. So something like India wanted to create, and I think it's Modi's vision to have a IFSC in India, and that's why. And every year there are certain changes which are made, extending the benefits to IFSCs, and maybe still trying to establish India. I think it's still not a very established financial service center compared to other global financial service centers which are located in maybe Singapore, Dubai, or Hong Kong. So every year some tax incentives are given. So some tinkering here and there done, some benefits given to IFSC. Angel tax, we already mentioned, Vineet mentioned, it's a very, very positive. This provision was kind of very subjective. I mean, what is a fair market value is very, very subjective, and it was kind of an harassment for really taxpayers when for startups when they receive funds from angel funds, which are all regulated entities. So it was a kind of a draconian law which has now been abolished. So it's a good move. There are a lot of changes to plug loopholes. So some tax plannings which were being done by taxpayers, there have been some provisions to plug those loopholes. So we'll quickly go through it. One is rental income. A lot of taxpayers were offering rental income as income from business or profession, and accordingly claiming all expenses deduction. Whereas if you offer it as an income from house property, then the maximum deduction which you can claim is 30%. So now it has been clarified that if it is a residential house property, then it has to be offered under only income from house property. You don't have an option of uh, disclosing it as a business or profession. 47.3 section, which is gift taxation. So 47.3 exempts transactions which are in the nature of gifts. So here the position taken by certain taxpayers was that gifts given by companies are not covered, are also eligible for this exemption. So companies were giving gifts to maybe individuals or to some other companies. So that has been clarified that only an individual or an HUF can do a gift, but not other entities. So some structuring which was earlier possible in the form of a gift is getting restricted. Again, this is again, I think, a provision which is a double-edged sword, because under the recipient's hand, this gift was getting anyways taxed under 56(2)(10) as a gift. If it is not a related, it is not from the prescribed relatives, then it was anyway getting taxed. But now it could get taxed at both sides. Inclusion of taxes withheld outside India. So a lot of people having overseas income, they were withholding taxes that were happening overseas, and what was being offered to tax was only the income received in India. So the credit was being claimed for this taxes. Now it has been amended to say that whatever taxes are withheld in outside India also has to be offered to tax in India. For insurance companies, some loophole was there, where a lot of insurance companies were claiming all expenses as deduction, and there was no provision to add them back because there is a separate rule for computing profits of insurance companies. So that has been amended now to say that expenditure which is not related to business cannot be claimed as deduction. Section 55 on this fair market value of unlisted shares. So as everyone knows that earlier we had exemption for long-term capital gains on shares, listed shares. That was changed in 2018, but they were grandfathered. So any capital gain which accrued till 31st January 2018 was grandfathered, and only the profit post that was getting taxed as capital gains. So there was certain position taken that in case of shares which were unlisted as on 31st January 2018 and sold subsequently, there was no provision to find the value of those shares on 31st January 2018, and hence going back to the old case of BC Srinivas Shetty, that says where the provision computation mechanism fails, they cannot be a levy of tax. So that position was being taken, but now it has been clarified that if the shares were unlisted on 31st 2018, then the fair market value can be calculated using this cost inflation index ratio, the indexing method, which currently in this budget coincidentally has been removed. So that method can be used to compute the cost as on 31st March 2018, and accordingly will have to be offered to tax. Going ahead, some change. So this were, I mean, we have covered what were the tax reliefs, what were the tedious rationalization. We have covered what were the provisions changed to plug some loopholes. Some changes in the international taxation. One thing which already Vineet mentioned was the tax rate was been reduced for foreign companies from foreign entities from 40% to 35%. It's a good move because 40% was quite high. And some few more changes. One is presumptive taxation regime introduced for cruise ship operators. No, I don't think so. There are anything significant cruise ship operators in India, but I think government was to promote tourism and wants the foreign cruise ship operators to come to India and operate. So for them, they will have a presumptive taxation, a simple regime where 20% of their receipts will be deemed as profits and accordingly taxed. Um, and similarly, on I think there is some small provision in transfer pricing also for SDTs. So the law currently provided in the TPO could look at transactions which have not been referred by the assessing officer also in the case of international transactions. Now it has been expanded to include also those transactions, SDTs, which have not been referred, and if the TPO comes to them while during his assessment or audit, then he can look at those also and determine the ALP. Moving ahead, again, one change is on the submission of statement by liaison office. I think this is a very small change, but penal consequences have been reduced. Swati, we can move to the next slide. Yeah, so this is on a liaison office. They have to submit every year a statement certifying that activities are not tax generating activities and what is allowed by the RBI only. So there has been amendment that regarding the due date and also the penal consequences, what could apply to them. So there is some relief that the penalty will. So earlier it was automatic penalty if there is a delay. Now they have said if there is a valid reason for the delay, that penalty should not be given. Now I will go to some specific changes which are significant. So moving ahead, the change is also is on the remuneration allowed for working partners. The limit which was there earlier. Next slide, Swati. Limit which was there earlier was quite low for the remuneration that could be paid to a partner. Now it has been increased. There are two slabs in the limit. So the first slab limit was up to 3 lakhs of book profit, and you could pay only 1,50,000 or 90% of book profit. Now that first slab has been increased to 6 lakhs. The balance is the same. Next is on buyback of shares by companies. So this is again one change which is very, very significant. Earlier buyback, there was a buyback tax in 115Q section. Now that has been replaced, that has been removed, and now the shares, whatever the buyback consideration will be received, now it will be taxable in the hands of the shareholders as dividends, not as capital gains, but as dividends. And whatever, it is very strange, as they could have made it simply capital gains and left it. Now they, what was there much earlier. Now they are saying that whatever consideration is paid will be taxed as dividends, and then no deduction will be allowed, but the capital loss benefit will be given, which I think is not good from a taxpayer perspective. I think they want to deter buybacks. That seems to be the objective, because when it gets taxed at dividend, you get a 30%, get taxed at 30%. And if you get a capital loss, if it had been a capital gain, it would have been at max at 12.5% or maybe 20% max. So now it will be the capital loss. If you get also, that loss will be set against the capital gain, and the capital gain would have been taxable at 12.5 or 20%. Whereas now this whole consideration will get taxed. I think this will deter companies from, or at least deter shareholders from doing for getting into buybacks. Powers of CIT appeals is this, which already I mentioned. Currently, the power of the CIT appeal is to confirm, reduce, enhance, or annul the assessment in case of an appeal. But what has happened is during particularly in the COVID time and in the these faceless assessments, is the SSCs have not responded in most of the cases for varied reasons. And then the officers, because of the time barring nature of the assessments, have gone ahead and done an assessment and the best judgment assessment. So when they appeal, the taxpayers produce all the documents, and it becomes the assessing, or the CIT appeal has to basically do the role of an assessing officer and do the assessment. So now the CIT appeals, because of the backlog of the cases which are there with them, they're not able to do justice to this kind of assessments. So now he has got the power to remit the issue back to the assessing officer. There are some consequential amendments also on by when the assessing officer should do the reassessment. The reintroduction of the block assessment search cases. So there was earlier this block assessment concept which was there, which was very simple, settled. I don't know why the government changed it to the individual assessment years, and now they have got the block assessment back. Now they have got the block assessment approach of assessment for search cases, which is 6 assessment years will be clubbed together and 1 assessment order will be passed. I think this is a simpler way of doing it rather than of doing of each assessment year. And there's a 60% tax rate, no interest or penalty, and there is a penalty is also is not there if the taxpayer himself admits and files the return and pays the taxes. But yeah, if he litigates and it is sustained, then he will have to pay also 50% penalty. Assuming 60% of the tax and 50% penalty, almost 90% goes away. But yeah, again, this is a reintroduction. I think it's a good thing because it was very cumbersome to really compute tax for undisclosed income or undisclosed wealth, which is found during a search or a survey, to really pinpoint it to which year it belongs to. Some time limits also have been prescribed then when the assessment has to be completed. I'm not going into specifics of it, but it is a very specific only for search and survey cases. 148, this again has been subject to quite litigation. So now again, they have revamped the section completely, so and put up specific time limits. And also earlier, they could go back up to 10 years if the amount was more than 50 lakhs. Now it has been reduced. Reassessment time period has been reduced down. I think it has been reduced to 5 years. So the normal is 3 years, and if it is more than 50 lakhs, it can go up to 5 years only, which is again a good thing because going back to back also is again a challenging thing to do assessments going back up to 10 years. And now all the taxpayers have to maintain documents for up to 10 years. So the going back has been reduced to 5 years. Chargeable trust and institutions. This again, there were two schemes to it. Section 11 to 13 and section 23C. 23C was particularly used by educational institutions and hospitals. Now the proposal is to merge both the schemes and have only one scheme. And slowly the second scheme, which was under section 1023C, will be removed. So the approach has been there will be only one scheme. I think, yeah, it will make life simpler because these sections are quite, I would say, complex and confusing for a normal taxpayer. Yeah, so yeah, these were the significant changes that were there in the budget. Yeah, we can take up any questions that have been there. As I said, nothing great, but yeah, nothing negative as such. A few positives. So yeah, hopefully with the announcement of a revised income tax act, I think the next year it could be something which could be really a game changer going forward. Yeah, thank you, Swati, and over to you, Vineet.
Thanks, Pankaj. Thanks for giving insights about the direct tax proposal. And we have seen all the sectors, whether individual, corporate, all have got some add-on or concerns or even the relief. Now, if we talk about indirect tax part, as we all know, GST Council always have given their own recommendation, but still the budget brings always new insights and changes, not only from GST, also customs, also from central excise and all. Next slide, Swati. The major thing which all were expecting to come in budget is based on GST Council recommendation on amnesty scheme for the financial year 17, 18, 18, 19, 19, which are the initial 2.5 or around 3 years, which all people have paid because of issue on the GST network, non-awareness of the law, transition credit issue and all. So all we're expecting some relief will give. And GST Council has given the major relief. And if we read the now section 128A, which has now classified what all issues which can be have relieved are given there. If you received any SCM under section 73, or you received an order, or received a statement, or you received an order pending at Commissioner Appeal, or Commissioner Appeal has given the order and pending for next course of action because of GST Act. GST Act is not there still in the pipeline. Already government has taken the all steps. Maybe we can expect by next year, by January, we'll have all benches live across all India. In all three cases where SCN or an order or a commissioner, when issued under section 73 are issued, and if you have any liability, you can pay it without interest and penalty. obviously the government is going to issue a notification for the same to decide more conditions and a date. But as per GST Council recommendation, it will be 31st March 25, by which you need to pay and get a relief from an interest and penalty. And as we all know, the interest is around 18% per annum in GST, and from 17, 18 if you compare, your tax become double. It's a major relief under this MSC scheme which government has given. Now, if we go further deep dive in this provision, even section 74, which is not specifically covered as a heading, but it's covered in the proviso. What it says, if you received any order under 74, which has been challenged at commissioner appeal or tribunal at court, and the court or appeal or tribunal says there is no fraud, collusion, misstatement or suppression involved, it means it is falling under section 73. If that is the case, such matters also would be considered under section 128. It's a big relief which no one was expecting government will give, that has been given. So in case the 73 SCN statements ordered by commissioner appeal or pending at this one, you can go in 73. For 74, if any relief for commissioner appeal or court telling that there is no fraud involved, there also you can go on relief, pay the liability for 3 years and without interest, without penalty. Next slide, Swati. So in case if any additional liability comes due to the commissioner appeal order or judgment by courts, you need to pay within 3 months. Then only you will get relief here. We still have to wait for notification for dates and all, but still, if any liability comes under 74 with additional amount, you need to pay that additional amount within 3 months. And again, bad thing is they did not give this relief for erroneous refunds. Specifically, if you see when judgment came in 21 for inverted duty structure refund of input service, where Honorable Gujarat High Court was allowed, but due to other courts which disallowed them, the Supreme Court has given that no, IDS refund on input service not available. In that case, it's a erroneous refund, but due to interpretation of the law, obviously they should give relief. So there's so many multiple judgments of High Court. But here in 128A, if you got any such refunds, you need to pay back. They are not giving you relief. It means you need to go to the courts. Further, if you see, you need to withdraw any such matter pending at appellate level or tribunal, then only you will be eligible to have this benefit under this section. And all the proceedings will be concluded and you will not have any right to file any appeal against such closure of the proceedings. It means it's a one-time closure. It's a good scheme which everyone is expecting and a major relief. Now, if you come to the second part, Swati, can you move to the next part? Right. Now, if we talk about the new section which brought, which is replacement of 73 and 74. 73 is for other than fraud, and 74 is the in cases of fraud where they can do the assessments and all. So these sections are applicable till financial year 2024, and now onwards for the current fiscal year, the new provision came. Objective is to have an alignment of both provisions in a single section. Further, they have also given relief where you need to pay the amount in 30 days before issuance of SCN or within SCN. That time limit has been increased 30 days to 60 days. This alignment of sections in additional benefit of giving the relief from 30 to 60 days and other provisions has been done. And further, where the government is having a habit of increasing time limit to issue the SCN or order, like we have seen in the 17, 18, 18, 19. Now we see 19, 20 to 31st August, we have a time to issue the order. Such cannot be done. Now, in both the cases, whether fraud or non-fraud, they have to issue the SCN within 3.5 years of the filing of annual return due date. And they need to pass order within 1 year or 1.5 years, subject to non-fraud and fraud cases, from the issuance of SCN. So now there is a time limit, so that they cannot stretch it. Like we have seen the cases where the notice issued in 21, still proceedings are happening. But after this new section, such thing will not continue. It's a big relief. One more relief which was given in the GST Council recommendation is for whatever liability under RCM, specifically from an unregistered supplier, for example, import of service or domestic reverse charge mechanism. In that case, still we need to go from a time of supply. I'm talking about only for services. And number of people were not able to claim the credit because of issue of interpretation, like for ocean freight, like for secondment of employees. Now, if they need to pay, they need to pay with interest or penalty. I will take one example. We have one of the company who have the multiple RCM liability on secondment of employees, all are experts from 17, 18 to 2021. Now they need to pay because the Supreme Court had told all the secondment of employees are liable to service tax, and now same continue in GST. So they need to pay the amount with interest penalty, and also they cannot take credit. It's a multi-dual impact on them. So after the relief in section 128A, after changing of the place of supply, now whatever taxes they will pay for 3 years, they will be able to claim credit because they will raise self-invoice now based on the revised provisions, and they don't need to pay interest and penalty. It's a multiple amnesty scheme, I will say in brief, which has given benefit to the industry. And it is not for one industry, across all sectors, they got this relief. So what change happened here? The self-invoice for an unregistered supplier for RCM will be the time of supply. And accordingly, you need to pay, and you can also claim credit. Next slide, Swati. Again, the relief which was announced in GST Council recommendation. This relief we have to see in two parts. One, for any credit in the initial 4 years from 17, 18 to 2021, if you have claimed a credit and have filed the GST return till last date of filing annual return 30th November 21, for any of the period, you can still claim the credits, no impact. Some people have reversed it, then it's a loss. But here, if you claim the credit, no reversal done, your issue is resolved now, even if question come because of due date as per section 16(4), it now will be counted by this new provision, a big relief. The second major change which happened is, we can see number of cases where registration has been cancelled, but after involvement of court or proceedings, it is registration is revoked. But what happens, for example, for previous financial year, if my registration has been cancelled, and assuming it is revoked in January 25, so obviously whatever credit I missed out for previous financial year, I need to claim by the 30th November, but I'm not able to do it. But now after this change, if I file my return within 30 days of revocation of cancellation order, I will be eligible for credit. It means section 64 restriction of availment of credit will not be applicable in this time. Again, a big relief, especially for a small taxpayer. Due to any small issue also, their registration has been cancelled, like absence of people at the premises, no one was there, or not able to tag it, or any other reason. A major relief again given, which was even not announced in the GST Council recommendation, but yes, it's been given here. Now, if you see so many areas where due to general practice, GST has not been charged, In all this scenario, government is told they will decide what is the general practice for the industry to look into it. And accordingly, they will say, okay, you have not paid tax, no issue, no need to pay tax for any of the previous year. So now government has power to decide which industry, when, what benefit they will give based on its practice. And you can see recent change in Schedule 3, where co-insurance sharing of premium or reinsurance part, where the insurance premium is shared and all. They have made this entry into Schedule 3 so that it is not a taxable goods or service. Indirectly, if on 100 rupees of premium, the GST has been paid completely, and even I'm sharing the premium with the co-insurance being a lead in that transaction, again, there is no requirement to pay the GST. Same for a reinsurance also. So I think in all the scenarios, such relief will be given. And again, the insurance industry got a big relief because there were multiple SCNs across India on such issue. Next slide, Swati. So now, obviously, we know by August, by January, we may have the GSTAT across India. And looking to the multiple cases going in appeals, whether it's 73, 74, now 74A, they've reduced the penalty amount. For an appellate authority, they reduced from 50 crore to 40 crore because CGST 20, SGST 20. Also reduced from 20 to 10%. Same way they for the commissioner appeal level also. It's a big relief. The example, suppose you receive a negative order from a commissioner appeal and you already done a pre-deposit of 10%. Again, you don't need to do it. Otherwise, they were 20%. It's a major amount blockage, higher cap on the amount. In all these scenarios, a big relief and going to have a major aspect where people will go to tribunals now, not going directly to high courts. You can see this one. The small change they come of transitional credit, where for input service distributor, any credit can be done, whether it's done before, on the date, or after distribution. In all these scenarios, credit will be eligible. So such relief is better wherever in service tax regime, people have the ISD registration. Next slide, Swati. Again, a big relief. I think this time government has decided that wherever issues, concerns of industry will be taken care. In the 17.5, there is a specific restriction, blockage of credit. If you are paying these taxes under section 74. Now such restriction is kept till previous financial. From this financial year, if you receive any of the order and you need to pay it, now that credit will not be blocked. You can understand because there's so many scenarios where you need to pay. So many judgments are coming, which is reversing the judgment of high courts. In all this scenario, if you have the notice or order level, it will be a big major relief for all this. By giving multiple relief for RCM transaction, by self-supply for unregistered, by having section 128 MSME scheme for previous 3 financial year, first 3 financial of GST, they have taken a benefit on the exports part. So the zero-date transaction where you export duty, specifically on goods, is liable to pay. In such scenario, from IGST, CGST, SGST law, you are prohibited to claim any refund. It means you have a dual impact. On 100, you are paying the export duty as applicable. And also on inputs, you are not able to claim refunds. Indirectly, they want to demotivate wherever sectors which have an export duty in the form of restriction of prohibited or restriction from a funded policy. And second scenario where they have to pay export duty. And now third scenario where even your input side refunds will not be given. It means your capex, your opex, all ITC will be blocked. We move next one, Swati, next part. 73, 75, as I told you, it's only applicable till financial 2024 now because 74A came into picture. Further, they have reduced a restriction on panel provision for e-commerce operator, looking to the multiple transactions happening in India now on e-commerce. Next, let's watch it. Anti-profiteering, which has troubled all FMCG real estate players from last 5 years, I will say. Based on the small complaint by the consumer, case goes, there's anti-profiteering committee, agency there, you need to go through the multiple levels and fight it. First, government is made, they will decide a day after which no complaint or action or proceedings will be taken against the companies under anti-profiteering. And second, they want to remove the anti-profiteering authority separately because now the GSTAT has came into picture. So now any proceedings can also be looked at anti-profiteering by the GST appellate tribunal. A good move. For insurance activity, I already told you on the general practice. On that basis, now they given relief to the company having the co-insurance aspect or issue of reinsurance. A big relief to the insurance industry, whether a life insurance or general insurance. Next slide, Swati. Further, now we know multiple tribunals across benches will come. But principal bench, which will be there across state, maybe single principal bench in the state or maybe multiple principal bench across multiple benches may have, it's still not decided. But government will decide which matter will go to principal bench, which not. It's a good move. So we have seen in such state, there are multiple cases pending even from 2011-12. And the principal bench are not able to give time or hearing also for that matter. It's a big relief and obviously it will reduce the pending litigation in the new GSTAT for all people. Further, again, one more relief. It looks small, but we all know matters before the DGTI, matters before DRI, matters before the commissioner level, where the summons are issued, they ask directly promoters or directors to come for a CEU level. It's very awkward situation where even for a small issue, they will create a complete drama. And even we've seen now they told powers where the DRI or DGI, they need to first discuss the matter with CBIC and then only they can take a matter with any company. Both move. In that move now, they can authorize any representative to go on their behalf. Condition that the officer should accept it. If officer is okay, having an authorized representative of the company, they can appoint it and then he can do it matter. It's a good move because there's so many legal aspects or technical things are involved where they need support of consultants or a tax practitioner or a lawyers. But due to non-allowance of any person other than company person, they are facing issue. And we have seen matters at the various location where client has to go again travel for even a small issue and clarify them. A big relief. Now for all the government companies, PSU, they need to do monthly compliance on TDS, whether they are having nil transaction or multiple transaction. Good move. So many people are not able to see the TDS amount. And we have seen there is accumulation of TDS amount and they're still paying taxes. And that is sitting in the books. Even they can go for refund. For so many small contractors or EPC contractors or corporate contractors have this issue of accumulation credit or non-reflection of TDS credit, which they can avail it to pay their outer liability, which they're not able to pay. After this monthly return, yes, it's a big relief from both sides to do it. Next slide, Swati. Obviously, government will issue a notification to decide when and which scenario you can do the revocation of cancellation. It will not be in all the cases. Biggest relief for alcohol industry. In today's scenario, alcohol is in the excise duty and state VAT. But input, which is a major input, which is called extra neutral alcohol, is liable under GST. When you are not paying the GST on output, but paying on input, it's a double impact on the industry. Government understood after 7 years of trouble to the industry. Now, even extra neutral alcohol will not be liable to GST, indirectly reducing the cost of making the liquor, and good news also for consumers, so that even the liquors may can see it will be cheaper in future once this is notified. Next slide. We have discussed all the GST aspects which have made changes, having multiple amnesty schemes, giving the author's ability to people who can appoint it, on RCM perspective, on the alcohol industry, on insurance industry specific. Now if we see from customs, they are minimal changes but very relevant changes. If any one of you are involving under FTA, Free Trade Agreement, or a SEPA, or you can say any other name, and you are taking the FTA benefits, first thing you need to comply with Carota, apart from a country of origin certificate. I don't know how many people are complying with the Carota compliance, which came in September 20. Now, big relief is, apart from country of origin, you can even use self-certification. Now they removed from a proof of origin certificate to proof. It means it may be self-certification also, all based on the FTA under which you are importing it. It's a big relief. It takes time to get sometimes country of origin certificate. There are some issues under the country of origin certificate. You're not able to do a compliance with Carota. Now, even a self-certification by the company, if allowed under FTA, you can take it and get the benefits. Another thing which is not a good news for industry, because recently when judgment came in the month of June for the companies who are into the mover scheme, which is a custom bonded manufacturing warehouse, where one circular came in 22, which disallowed approval of mover, which is also called a mover scheme, for a EPC under renewable project. It means if I'm putting a solar project for generation of power and supplying it to government or to private players, that was disallowed to take the benefit, because obviously still solar project or wind project have major imports. People went to High Court, challenged all the SN issued for the cancellation of license, and Delhi High Court has given relief, saying that the circular is illegal, unconstitutional and biased, and set aside. Now, just to reverse the judgment, because already pending at Supreme Court, government has went to Supreme Court now. But before any judgment comes from Supreme Court, the government has changed the provision of Section 65(1) of Customs Act by saying that government can decide which product or which sector will not be eligible for setting up the warehouse under this provision. I don't know whether it will be challenged or not, but yes, it will be a big impact. With the changes in the first schedule on the various tax rates, on the CVD rates. Next slide, Swati. Sorry, next slide. Yeah, the duty-free import period aspect on export time for aircraft and vessels. They increased it from 6 months to 1 year, an additional 1 year extension for aircraft, because they want MRO services to grow in India. Even they given relief at a lower rate of 5% under GST. These all are the mix to ensure that India is a global hub for repair services for all the aircraft, ships, vessels, and all. Next slide. If you see from a custom duty rate, as I told you, major relief for jewelers, for semiconductor industry by reducing the custom duty on gold, silver, platinum, reduction of mobile rate for mobile phones, PCB assembly for mobile phones, mobile chargers also. But I think as Mr. Jairaj mentioned, it is not good for industry. So many players who are manufacturing mobile chargers in India, But now after this change, again, imports will have more stress rather than make in India. I don't know why this change happened. Could change the solar energy sector by having more capital goods exemption continue if you manufacture solar cell and panel. All cancer drugs have been exempted. For PCB assembly for telecom has been increased. It increased mainly for giving the benefit to the PLI holders and other telecom operators. So make in India should happen. But same thing has been reversed to the mobile sector. So they brought a PLI for mobile phones and already disbursed multiple crores, thousands of crores amount. And even 2.0 are under consideration. In all this scenario, if you're reducing the mobile PCT on mobile phones, what is the objective? Even I can't comment on that, but yes, they should look into it. Next slide. Wherever they want to increase the BCD, where they want to increase the export duty, reduce export duty, alignment of all the provisions of exemptions, because now they decided 2 years back, every exemption notification will have a life. They will decide whether to extend the date or not to extend date. In some cases, they have increased the date. In some cases, they stopped it by September, October. Beyond that, it will not work. So they are very clear. Exemptions will not continue infinitely. It will have a life based on industry requirement, based on make in India, based on growth of country. It will not be given end to end to everyone. Even for repairs, they have given the extension of re-export period from 6 months to 1 year. Also under warranty from 3 years to 5 years. Good move. So tomorrow India can see manufacturing come warranty service repair. Not limited to only one-time services, but regular services where goods come, get repaired. I can re-export it back. Next slide, Swati. So major relief for a SEG, where a developer or unit. Earlier, cess under GST was chargeable to all the people. Now, for SEG, they are given relief that retrospectively from 1st July 17, SEG developers unit are not required to pay. Now, question come, now we are after 7 years, such relief been given. What about my refunds? Whatever cess we paid on all this, please allow me to get refunds. And we hope that immediately there will be a relief where the government is bringing the refund guidelines so that whatever cess paid, and already it is mentioned in the budget speech and also, yes, that amount has to be refunded back to SEG. Good move, because SEG is a zone where everything should be tax free and there should not be any taxes to be considered into. So that's all from indirect tax proposal. Now we can take any questions from all the people. Swati, over to you. Any questions and all, if any from the audience?
Yeah.
We can take it now. They can raise a
Thank
hand
you.
or they can put
Thank
on
you,
the
sir.
Q&A.
Yeah, if anyone have question, yeah, please raise your hand. We will take the questions related to anything related to tax, direct tax or indirect tax. Yeah, anyone have any question? So, sir, if, I individually would like to know, like,
Mr. Devesh Kumar has
is
raised a
there?
hand.
Yeah.
Yeah, please.
So, yeah, Devesh, please go ahead with your question.
Hi, good morning. I have one question. You said that, I mean, if I have any income source other than the salary, I can get the TDS deducted through the employer. So how to declare that?
Pankaj, can you hear us?
Yeah, Vineet, I can hear you. Maybe can you repeat the question, Devesh? Sorry, I
Can
didn't
you
hear
on the
question.
screen also, Pankaj? It will be easy for people to connect
sorry.
with you.
The question is, I mean, you mentioned that, I mean, if a person is having income source other than salary, right, that can also be claimed or that can also be taken care through the TDS. So
Yes.
definitely it has to be declared to the organization where the person is working.
Yes.
What will be the mechanism under which section it will be declared. Like we have so many other sections like HRA is there, reimbursements are there, LTAs are there. So similarly, how to claim this particular thing? How to inform the organization that this also has to be considered for the TDS?
Okay. Yeah, good question. There is every year a circular released by the CBDT on TDS on salary, which has the detailed procedure of what needs to be followed. I mean, I just, as you mentioned, HRA. So for HRA, what is the HRA amount? What is the rent being paid? So what documents you need to collect? So for this, there's a CBDT circular which comes every year. So in sum and substance, we will have to follow that CBDT circular and do the procedures will be as per that CBDT circular. So it's a very detailed circular. So that you will
So
have to
that
consider.
circular is not a circular. It will be, I mean, this particular, I mean, explanation, whatever you have done, it will be taken care from the 24-25, right? Not from this year.
No. So this provision that you have to take care of other income of the employee is not a new. It is there from long time. It is not a new thing at all, because that circular always said, because the 192 section says tax on the income of the employee. So it is all income. It is not just the salary income. Okay, so that circular which is there was always covering all other income. Now the thing is, the circular did not provide, because the act did not provide specifically, that TDS which has been done, or TCS which has been done on the income of the employee, that to be considered while computing the tax to be deducted by the employer. So now it is a beneficial that the employee can give the details that this TDS has been done, or this TCS on my income has been done. So consider this while computing my tax liability.
Yeah, that's clear. My only thing is that, say for example, I have another house from where I'm earning the rent. So that rent I'm declaring in the organization while declaring everything, all my incomes.
Yes.
Right. So apart from the house, if I have any other income, right, under which the article or the setup or the headings are not mentioned uh, in the format of the uh, filing copy, which organization usually ask an employee to declare everything here.
Yeah.
Pankaj, can I just chip in if you don't mind?
Sure, please.
So hi, Sandesh here. See, there are two things over here, Devesh. As an onboarding process, any company always asks for your previous employment details and the salary coming out of it. That is one. In that, you get the TDS too. Now, coming to the other source of income, it is always the ownership of that employee to declare it. And if you declare it, then only it is something which employer can consider from the TDS perspective. The advantage what Pankaj has shared on the call is, earlier only the income used to be considered and the TDS used to be worked on that. In the current scenario, the related TDS, which has already been deducted, can be also considered while working out the TDS to be deducted by the employer. So this is now being possible because now AIS and TS are easily available.
Maybe I am repeating my question.
Ownership lies with the employee. The advantage what employee is going to get is any other TDS being deducted from any other source of income. For that, the employee will give the due credit and accordingly reduce the TDS amount. Am I right, Pankaj? From the practical perspective, I may not be going too technical on it.
Like, see, I have mutual funds. I have shares. You are on mute, Pankaj.
Pankaj, you are on.
Yeah, Sandesh, what you said is perfectly right. The procedural aspect on what form the details have to be taken, how to the TDS credit has to be given, that we have to follow the CBDT circular once it is released.
That's right.
So one more, maybe after that, other can ask. See, I have all the other source of incomes like shared transactions I'm doing. I'm earning some amount by trading and all, mutual funds, FDs. So those things are already taken care by the bank or the other companies, right? Because we share our PAN number there, and through the PAN number it is tracked, and all the incomes gained from those sources, that is already taken care. So how different is this particular? Uh, See, these things we won't be Again, coming back to the organization and saying that, okay, these deductions has already been done. So
Devesh, see the other provisions, all other TDS provisions, except for maybe 195, which also requires you to compute the tax liabilities. The other TDS provisions do not require the deductor to compute the tax liability. He has to deduct it on a fixed rate, right? There is only 192, which is salary income, and where the employer is required to compute the tax liability. In other cases, even if you don't have any other income, obviously you will not be paying any taxes, but the TDS director will deduct the TDS. Whereas in salary income, he will actually compute whether you are really having TDS, really having any tax liability, and then deduct. So there is a difference in 192 vis-a-vis other TDS provisions. So just I'm giving an example, like an interest, they may deduct a TDS of 10%, whereas you may be falling under the 30% slab rate. So the balance 20% you will have to pay.
okay, got it. I was about to ask the example, but you already gave that. Yes, now I got the clarification. Thanks.
Okay.
Yeah,
One
Mr.
question
Satish, you have
for
the
me.
questions. Yeah.
Hello, Subodh here. Good
Yeah,
afternoon.
we have one question from Satish Kota, like from Nava Times. I think, yeah, you can ask the question.
Okay. Vineet, Satish here.
Hello, Satish.
You mentioned about the proof of origin as per from the customers according to the character 2020. That proof of origin or just proof that is required is only from the perspective of the FTA or from any country's perspective? Because
It's
when it
mainly,
is
obviously they are looking only from a FTA perspective. If
only
any
FTA perspective only, right?
Yeah, if any FTA allows self-certification, in that case, now India will consider it as self-certification also as a proof and give the benefit.
Okay. If not with any other non-FTA countries will not.
No, because no, it's only for FTA part.
That's what. Otherwise, there is a lot of abuse involved there.
Yes.
Thanks.
Okay, yeah. Subodh, please go ahead.
Yeah, question related to this capital gain indexation. So that will be effective from next year, right? Means law when it becomes law. So whatever something which I have purchased in 2012, I still can get indexation till this year. Yeah.
So what is that 2012 you purchase? What is the kind of asset?
So for example, I purchased a house for about maybe 60-70 lakhs.
Yeah. So what will happen is 2012, the house which you purchase, assuming you sell it in the current financial year, 2024-25,
Yeah.
then the tax rate is 12.5%. Whatever capital gain, suppose you bought it 70 lakhs, you sell it for 2 crores. On the 1.3 crores, you will pay at 12.5%. The earlier regime said that 70 lakhs you have to do indexation. Maybe by the indexation, you would have reached up to 1 crore, the indexed cost, and the capital gain would have been 1 crore. But on that, you would have paid 20%.
Okay.
Okay. But now you will pay flat 12.5%, but no indexation benefit.
Thank you. Yeah.
So this
Okay,
will be applicable. So this
going
will be
ahead
applicable.
with, yeah, Rajkumar has shared one question. Like he is asking, as an individual, he would like to know mainly on new NPS. What are the new changes and how it will affect them? Like we are having our associates on the call also. So can you explain on that?
Yeah, so the NPS scheme has, deduction is available for the employee if he contributes to the NPS scheme. So the previous thing was if the employer gives the NPS schemes, that is the employer is having an NPS, then it was up to 10% of the basic salary, the deduction was allowed for the employee. So, but for government employees, it was 14%. Now they have made it consistent, 14%. Up to 14% if a contribution is made by the employer to the employee's NPS, the employee can claim deduction under 80CCD. And there is another provision also which no changes has been made. Suppose the employer is not given any NPS scheme or doesn't run an NPS scheme, and the employee himself wants to contribute it, then he can still contribute it, but the maximum deduction allowed for that contribution is only 50,000.
Okay. Okay. And yeah, like I individually would like to know, like, is there any specific impact for IT companies? Is it there something?
I don't think so. IT companies, there has been, I mean, from an income tax angle, I don't see anything specifically impacting. I think, in fact, I mean, but specifically impacting, I think there has been only few changes like IFSCs,
Mm-hmm.
insurance business, but I don't think so. Any other sector, they or the cruise business, which I said, for foreign companies wanting to operate cruise ships. So these things are there, but no other sector in specific has been any provision has been introduced.
Okay. Okay. Sure. Sure. So yeah, people, anyone, any questions? If you have anything, you can just put it over the chat, or you can raise your hand. We can go ahead. Or yeah,
Mr. Karthik
Karthik.
has a question.
Yeah.
Yeah. Hey, hi, Pankaj and Vineet. A generic question. So can we assume like in the longer run, there will be only the new tax regime? Because for the old tax regime, we are not funding any sort of exemptions or any new amendments. Only to the new tax regime, there are new offers that are being implemented so that I mean, the new individuals or the individuals who are already in using this old regime can be migrated to new. So, is there any sort of plan by the government or anything as such, like in the longer run, maybe in a period of 5 or 10, there will be only one tax regime which is new?
Yes, definitely, Karthik. I think there could be there, and it will happen because there is a new income tax act that is coming in. Maybe the finance minister didn't want to directly immediately shift only to, because if you look at the changes, they're all being benefited the new tax regime. So maybe the old regime will die its natural death. They may not be any longer beneficial to anyone, or anyways the new income tax act or the direct tax code is supposed to come within 6 months. So maybe under that there could be only one regime, and you will not really have a choice.
And one more thing, like in terms of the health insurance, so day by day we are seeing a drastic growth in the health insurance policies. Like the premiums are being increased a lot. So what kind of benefits we can like see in terms of filing the returns, maybe taking the insurance for our parents or anything as such?
Yeah, see, again, if you're under the new scheme, obviously you don't get any deduction benefits. Uh, so what is beneficial if you really someone wants to plan, then the employer giving this benefit to the employees or to their family members. So that is really which is beneficial. Otherwise, for an employee, if he contributes under the new scheme, he will not get any deduction. Under the old scheme, if it's standalone basis, the medical insurance will not help. He has to claim number of deductions to really benefit in the old scheme.
Okay. Thank you, Pankaj. Thanks, Vinith.
I think, Pankaj, people have many concerns about the individual tax regime. So much changes of removing of index benefit and all, higher LTCG.
Yeah. I think changes have not been significant. 17,500 was a token benefit that is being given, that too for the new scheme, under the new scheme only. But I think in a way it is good also because this every year expectations of some more benefit keeps coming up. So I think people going forward also will will not have the such expectations, because this all happens because there was a lot of expectations on this budget, and obviously every budget there is expectations from different taxpayers. But yes, I think everyone should look forward to the new income tax law which she has announced.
But removal of this index benefit obviously will impact the real estate sector and also the jewelry or etc. because higher
See,
capital gain need to be paid now.
Yeah, the post the budget, there was a press conference where the finance minister said that the up to 2001, the whatever the appreciation in the property has happened, that is grandfather. So if you have purchased property before 2001, what will be considered as a cost is only 2001 rate. Okay. Now post 2001, if you look at it, the indexation also, it is a balanced way of looking at it. Indexation has been removed, but the tax rate has also been reduced from 20 to 17 to 12.5. So 7.5 is the reduction in the tax rate also. So I don't think so. It is like indexation should significantly impact. Uh, uh, the tax cost, because 12.5% is a low rate. I think anyone wouldn't feel pinched by the tax rate if he has got a good gain, because what is going to pay is only 12.5%.
Right. See, one more angle to this particular thing is, if I may, see, the objective of selling that real estate matters the lot, because if the objective is to sell and then go for a bigger house, then that capital gain and everything will get covered in that. There is no issue on that. The challenge will be for the senior citizen, maybe 60 plus, is getting a retire, want to downsize his lifestyle, wants to move from a metro to mini metro or other area. That's where the amount which he has to invest in low interest bearing securities will be high from the capital gain reinvestment perspective. That is what we have to wait and watch what government is finalizing on that.
True.
Yeah, so I have got few questions from our customers only. Like we have defense customer L&T Defense. So is there anything for defense sector, or if we talk about MSME sector?
MSME, if you ask me from a overall perspective, and they have given major relief on credit guarantee schemes, increasing
Okay.
the Mudra loan from 10 lakh 20 to Tarun loan, 10 lakh 20 lakhs. And then putting this specific 2 lakh crore for the internship for first employee joining PF, giving 50,000 relief, and even sharing the PF of employer-employee. There are multiple things from an employment opportunity, from a loan, and also from a GST. Any backlog in GST for the last 4 years, 17 to 21 years, relief. I don't know. Pankaj can tell more about income tax. And for defense, yes, they have certain reduction on the duty, and already the GEM portal giving so much initiative on the defense sector, also, and even so much Make in India happening. And already in the month of March and in June, they reduced multiple duties on the defense or increased duties to ensure that Make in India is happening in the defense.
Okay.
Pankaj, any from your side?
Yeah, I completely agree to Vineet. I think specifically nothing was mentioned for the defense sector as such, and that's why I think all the defense stocks yesterday were down. But the Make in India working and defense will definitely help. And there has not been I think, any reduction in the budget for defense sector. So the defense will continue to, will modernize, upgrade. So they will continue to make the investment. And also with the Make in India, exports is a big market for defense. So I think there has been nothing negative as such on the defense sector. Maybe a special focus was not that much mentioned, but I think overall it was. It will benefit all the industry. It is not benefiting any particular as such industry, but if other industries and overall it gets benefited, then obviously defense sector also will do good.
Okay. Sure. So yeah, now I would like to conclude this insightful session, and like I want to extend my gratitude to each one of you for your active participation. Our sincere appreciation to Sailotech, our event partner, for their commitment to knowledge sharing, and a special thanks to Vineet and Pankaj for their expert insights. Thanks for joining and enriching our understanding on the budgetary landscape. Thank you so much. Thank you everyone for
Thank
Thank
joining.
you, everyone.
you.
Have a good day.
Yeah,
Thank you,
if
Pankaj.
there is any
Thank you all.
queries, please reach out to us. Like we will be our experts will be always available to answer your queries. So yep, sure. Thank you.